takes some dimension or skill what we are about to discuss today, and of course they say practice makes perfect. So by the time we continue in it, we understand, especially for those that are offering finance and accounts at the master's level, or professionals like CFO and board members and shareholders can take advantage of this video and the skill I'm about to release to the world. From GJAMES Associate Channel, Gbenga Olatunji FCA is my name. Critical evaluation of board's performance through the presentation of financial statements. Apart from the auditor's opinion page or pages, basically 1 or 2 pages, there are a lot more in the annual reports and accounts that we can easily digest. And some folks will say that account presentation by companies, especially the multinationals, are not meant to be read. That is not true, because since the advent of international financial reporting, IFRS, IASs, and the like, a lot of disclosures and financial reports become voluminous. But nevertheless, all those volumes of documents are actually meant to be digested, and the easy skill of digesting them are what I'm about to share. Basically, the skill is in 3 folds, and we'll take it one after the other. And you know what? If we can implement them, understand them, and digest them, I can tell you, you are highly skillful and you are a pro. You are a master. I'm telling you. So what are those? The first I'm going to dwell on will be that of compliance. Compliance. An effective board performance or performing board, we ensure there are little or no faults as regards compliance matter. They try as much as possible to comply with rules, regulations in the industry, as a profession, and also as a company. So they are knowledgeable in tackling this, and it's going to be evidently shown in the accounts presented to us. And we need to digest and bring out compliance issues. This is the first way of evaluating the performance of the board. Of course, management too is being cross-examined. Having dealt with boss performance, automatically they are dealt with. That is one. Then we move on to another very important one, to understand the performance and level of performance of our board through the accounts they reported to us, is the angle of transparency and accountability. Transparency of the annual reports and accounts presented to us, and also accountability aspect of it. Those two are combined as one. The third angle has not been mentioned. Under transparency and accountability angle, we need to deal with that financial account presented to us, looking for fair reports or reportage, balanced reportage, and the understandability of the information there. An high-performing board will try as much as possible in their performance to give us the good news, to present the bad news, and to be neutral in all. Let me break it down. In presenting the good news, they will not overflow it in the accounts. In presenting the bad news and the challenges to the stakeholders, especially the shareholders rather, they will not underrate it or gross over it. They will say it as we need to know about it, and for any reason, for good future projections and the like, will not be overestimated or underestimated. They will just be neutral. So when we are talking about accountability and transparency, gauge it by the volume of the good news, how it was presented, the bad news, how it was presented, and the neutrality of the voice or voices of the board member as presented in the annual reports and accounts, or the financial statement presented to us. So we've spoken about compliance or non-compliance. We've spoken about transparency and accountability. Another way of measuring the effectiveness of the board is through effective governance. And how are we going to know that a board has effectively governed? Before we move on, I would like us to subscribe to GJAMES Associates channel. Click all so that you will not miss another upload. Like this particular video so that it can go around, and comment if there are any other thing you would like us to speak on in the world of finance and accounting. Of course, follow us on all our channels. As we move on to the final one that we should understand about the effective governance of the board of directors. Effective governance will always ensure wealth of the shareholders are maximized. That is, judicious utilization of resources, wealth generation, wealth creation. How are we going to know this, especially in the challenging economy? Take, for example, during COVID, which is a systematic risk. It is a general risk across board all over the world. Measuring the effectiveness of governance of a board of director through the usage of wealth creation and maximization needs to be combined with the two aforementioned: compliance, non-compliance, transparency and accountability, and those that we've said under the two categories. The reason being that in a systematic risk, not unsystematic risk now, in a systematic risk environment, some performance, and especially for listed organizations, market share value will be dictated by people's perception and sentiment, and it will use market share value alone to rate them. It may be unfair to their performance, because for COVID, almost all organizations except for very few industry bloomed by that time. Every organization nosedived in their monetary performance. So why am I saying this? Don't forget, when I started, I told us that this is an highly skilled finance and accounting aspects that we are dealing with, and sensitivity to the tool that we are using is important in practicing critical evaluation, especially as the board of director. So in a situation that we have unsystematic risk, basically risk that are unique to our industry, unique to our organization. Now, if we use the effective governance by looking at wealth creation, it will be very fair. It will be very fair. So wealth must be created in a manner that does not contravene any natural justice, prudency concepts, any rights of humanity, and sustainability. Once this is done, we can say the board is effective and they govern correctly. I started by giving us the exception to the rule of effective governance, which focuses on the wealth creation and maximization, and also had given us the aspect of fair presentation, fair reporting, reporting the good news as it is, not under disclosing the bad news that we have or challenges, and also the neutral voice of the board, especially the chairman of the board. It is important that we look at the chairman's statement, CEO statement, and the like for transparency and accountability, and equally for compliance matters that they've disclosed to us. The lesser of compliance issues we have, the better performance we can accrue to the board as a whole. From GJAMES Associate Channel, if you've received value for your time by watching this video, listening to this video, I would like you to subscribe, click the notification, and ensure you click all that bell so that any upload you will be notified. Comment, like, share us as we build the world of finance literacy and education together. We make wealth to circulate through financial literacy. We are value to life. You can be sure the next topic we are going to be dealing with is going to be of benefit to you also. Again, we are value to your businesses.